Hello, everybody, and welcome to this Carbon Tracker webinar on betting on gas, Poland's energy dilemma. My name's Richard Folland, and I'm Carbon Tracker's Policy and Government Affairs Advisor. For those in the audience who may be new to the Carbon Tracker initiative, we're a financial think tank headquartered in London, and our mission is to align capital markets with the realities of climate change. And to that end, our approximately 30-strong research team carries out in-depth analysis on the impact of the energy transition on capital markets and on the risks of investing in high-cost, high-carbon fossil fuels. First, a quick introductory word on the topic of our webinar. So, Carbon Tracker's report on Poland's energy dilemma was published on the 10th of February, precisely 10 days before Putin invaded Ukraine. So if the report felt topical when it was published, it feels even more so in the light of the huge implications for European energy and climate policy following the Russian invasion. So what you will hear today will, I'm sure to some extent, reflect this new reality, but we will still want to also concentrate on particular markets and regulatory issues raised by the report, such as the role of capacity markets, carbon pricing, which generates its own set of controversies in Poland, climate targets, and the role of renewables and storage in providing solutions to Polish challenges. So to let you know how we're going to run this 60-minute session with the excellent panel we've assembled on this topic. So in a moment, I'm going to introduce you to Jonathan Sims and Lorenzo Sani of Carbon Tracker's Power Team, and they are the authors of the report published last month. And Jonathan Lorenzo will present for 10 minutes on the key findings from the report. We will then turn to Monica Morawiecka, who is Senior Advisor to the Regulatory Assistance Project, and to Pavel Cizak, who is the Senior Analyst at EMBA, who will each speak for 5 minutes as a response and as a commentary on the report. But I'll introduce Monica and Pavel properly when they come to speak. After that, it's going to be over to you, the audience, for 30 minutes or so of questions and answers, discussion among our panel. And on the logistics for that, you'll be able to ask questions via the dedicated panel, which can be accessed from the bar at the bottom of your Zoom window. The panelists and I will be able to see the questions, and I'll pick questions accordingly. But I would encourage you here to start posting questions from the start as they occur to you. And I promise I'll do my level best to get through them all. But also maybe to encourage you to challenge us as well. It is important to us at Carbon Tracker that we're not operating in an echo chamber. So I hope that's all clear. And now on with the show. So I'm delighted to introduce Jonathan Sims and Lorenzo Sani. Jonathan is Senior Analyst in Carbon Tracker's Power Team, and prior to joining us last year was 8 years at the business intelligence provider Argus Media, where Jonathan concentrated on power trading, emissions markets, and climate policy. And he's also been a grains market analyst. Lorenzo is an associate analyst in the Power Team. He has a background as a research engineer, and Lorenzo has worked in the Division of Energy Systems at the Royal Institute of Technology in Stockholm. So that's the introductions. Jonathan, Lorenzo, over to you. Thank you very much.
Thank you, Richard, and thank you to everyone for dialing in today. Lorenzo and I are very happy to have the opportunity to present the findings of our latest analyst note and Poland's energy dilemma, which, as Richard said, we published in mid-February, and in which we assess the economic and climate implications of the Polish government's plans to build at least 5 new large-scale gas-fired power stations over the coming years. Next slide, please. We find that Poland's plans to build a new generation of large-scale combined cycle gas turbine units would be completely incompatible with both the policy pathway and emissions trajectories required for the country to make any sufficient contribution to the EU's collective 2050 carbon neutrality target. This would leave other EU member states needing to over-deliver on their own contributions to this goal to cover Poland's shortfall. The planned units are only projected to be viable because of overly generous subsidies through Poland's capacity market mechanism. And we find that the 5 units we have analysed would cost the Polish taxpayer more than $4 billion over the course of contract agreements, while at the same time likely serving to lift consumer energy bills, given the likelihood now of continued high price levels in the global gas market. The volatility that we have experienced over the past 18 months or so in energy prices, with global gas supply failing to keep pace with wild swings in demand due to the pandemic, had already made the case for increasing a country's exposure to gas markets highly questionable. But recent events in the weeks since we published this note have shown clearer than ever that now is certainly not the time to be investing heavily in long-term gas infrastructure. Relying on fuel imports from volatile political nations has always brought the risk that supplies can be either weaponized or placed under international sanctions. And the recent Russia-Ukraine crisis has highlighted the urgent requirement for accelerated low-carbon energy capacity deployment for Europe to reduce dependence on fossil fuels and to aim for long-term energy self-sufficiency. Lower-risk renewables are already available at lower cost to the power system than new gas in Poland, and the country's government must now take the opportunity of abandoning plans for a coal-to-gas transition and instead aim for a coal-to-clean transition that clearly now appears to be the best option available to it on both economic and environmental levels. Next slide, please. So on this slide, we identify the 5 planned gas units we analysed in this report: the 2 Dolna Odra units, Ostroleka C, Rybnik, and Grudziadz. These are due to come online over a period spanning next year through to 2027. They are all planned to be CCGT plant developments with an average unit capacity of around 750 megawatts. The total combined capacity of 3.7 gigawatts that these make up will see Poland's gas-fired power generating capacity more than double from current levels. We show on the charts here our projected net present values of the 5 projects. And as you can see under business as usual, all 5 developments are projected to be viable investments, although only mainly due to the generous level of out-of-market revenues offered to project developers through the capacity market. Next slide, please. But when we apply the net zero scenario to our model, and this constrains plant lifetimes to the shorter periods required to decarbonize the power grid in time for 2050 carbon neutrality, we can see that these earlier closures mean that 3 of the units will be unable to operate for long enough to recover their initial investment, with this leaving more than $200 million of potential value at risk of destruction if projects proceed to development. Policymakers later review national climate policies and commit to a net zero emissions pathway. Equally, if such an ambition is remotely under consideration by the Polish government, these projects should be cancelled now to avoid significant compensation claims from developers for loss of revenues if they are asked to close their facilities before the end of operational lifetimes to deliver climate goals. Next slide, please. As I said previously, all 5 of these projects are heavily reliant on the payments they're due to receive via Poland's capacity market mechanism, which provides additional out-of-market revenues to generators in return for reliability services to the grid. We show on this slide our sensitivity analysis depicting what happens to the net present value of the planned pipeline, with percentage reductions in the payment level that the units are due to receive annually over the course of their 17-year agreements under the scheme. And as you can see on the far left-sided bars here, we find that none of the projects would be viable without receipt of those capacity market payments. These contracts will be paid out at a total cost of around $4.4 billion to the Polish taxpayer and will significantly overcompensate some of the developers. As you can see on the far right-hand side of the slide, the level of payment due to be paid out to the Ostroleka C project could be reduced by as much as half, and the project would remain viable. Capacity markets should only be providing additional incentives to plant developers to encourage final investment decisions, as opposed to being the key element that allows projects to proceed as financially viable, as currently appears to be the case in Poland. While we accept that capacity markets may be a necessary feature of power systems to ensure security of supply, locking the taxpayer into funding expensive fossil fuel-based projects which may still struggle to recover initial investment appears highly misguided compared with the lower cost investment opportunities available in the renewable sector. Next slide, please. So if we now look at projected costs for the 5 projects and compare these to the lifetime costs associated with building and running new renewables capacity, all of the units will begin their life, if developed, as more expensive assets to run than solar, onshore wind, and even offshore wind farms in Poland, while the 3 plants due to start up beyond 2025 are projected to be outcompeted by even new renewables with battery storage capacity installed. This means that the Polish government will have a low carbon energy source able to provide comparable flexibility services to a gas plant available to the grid within just 3 years from now. Poland also has plentiful potential for offshore wind sector development, with its vast Baltic Sea coastline meaning the country could become one of Europe's largest generators in this sector. Capacity factors for this technology are already around 40% and are projected to continue to improve and reach levels above 50% by the end of the decade, which again is a comparable level to the grid supply services offered by gas units. This makes the investment case for pressing ahead with these gas plant developers highly questionable, and considering the extent to which the units could see their operating hours limited owing to competition from cheaper and lower carbon sources, while from an overall system cost perspective, they should not proceed to construction when cheaper forms of low carbon energy are already available to the grid. I'll hand over to Lorenzo now to take you through the remainder of the presentation slides.
Thank you, Jonathan. So in this next few slides, I will show you how changes in key commodity prices, namely carbon prices and gas prices, will impact the profitability and the cost for these large gas plants that are in the planning process in Poland. So in this slide, we start with the carbon prices, and in the chart, we can see the aggregate net present value of all the projects that are currently under development under different carbon prices assumption, going from -100 on the left side to +100 on the right side. And in red, we have our base case. What we can see is that in the first bar at the right of our base case is that already with a 25% increase in our base case assumption for carbon prices, all these units, all this investment will be unprofitable. And so investors won't be able, under this condition, to recover their investments. And to show you how likely this is to happen, I can show you quickly our assumption that in our model, we assume that the European carbon price will reach 90 euros per ton only by 2030. While in the last months, the price rose incredibly, and already this February, the price was at 91. So in a real case scenario, we can very easily imagine that the profitability of these plants will be on the right-hand side of this chart. So regardless of the very large subsidies from the capacity market, these plants risk incurring in large losses. And then moving to the fuel price sensitivity, it's important to remember that Poland is a large importer of gas. It's currently importing more than 80–85% of the gas that it consumes. And in this chart, we plotted the Poland gas index from January 2018 to November last year. And while we see that the average price was around $20–25 per megawatt hour, we already see that there were very big fluctuations in this period. And we considered a range from 10 to 45 in our sensitivity to show what will be the impact of these different price levels. And we can see it in this chart where we plot the operating cost of running these new plants compared under different scenarios. And in the background, we have the cost of building new renewables. It's a range going from the cost of building new PV to new solar PV to onshore wind plus storage. So this is why it's wide. And we can see at the first bar with that even a -50% decrease in the fuel price won't make this plant cheaper to run than building new renewables. Solar and wind will still outcompete gas plants. On the right-hand side, so we can see that a price increase of only 75% compared to our base case assumption will bring all the renewable technologies that we explore at a level that they're cheaper to build than to run these plants. So these would include offshore storage, solar, and onshore plus battery coupled with batteries. And in all the scenarios that we analyze, renewables are always cheaper than operating gas. Another very important consideration from this chart is that it poses some very serious implication for the electricity prices in Poland. In fact, by building all these big gas plants, Poland could double the current demand of gas for the power sector by 2027. This would mean that the Polish power sector will be linked even stronger to the gas sector and to the fluctuation in this commodity. So Polish consumers will be even more affected by future energy crisis or future changes in prices. And we want to quickly show you also what happened in the past 6 months, and we try to calculate this. So due to the European energy crisis, the criminal Russian invasion of Ukraine, the gas price in European markets spiked to historical heights. And we try to estimate what the price levels are at the average of the past 6 months. And we can see that the marginal cost of gas plants was more than 3 times bigger than in our base case. And this again highlights the importance of not relying in such a source of in such a fuel source, because what happened in the past month quite completely destroyed the concept of gas as a reliable, affordable, and cheap transition fuel. And moving to our conclusion on the Poland energy dilemma, we've seen that these new plants are incompatible with net zero targets. They are heavily reliant on taxpayer monies, and they pose a very significant energy security risk. Thus, our recommendation for Poland is to abandon the concept of gas as a transition and bridge fuel. It's not. And to very aggressively adopt a coal to clean transition. So remove barriers for renewables deployment, accelerate renewable deployment, and take advantage of the huge resources, especially offshore wind. And finally, invest both in energy efficiency and energy storage to increase the resilience and efficiency of the grid. By doing all of this, Poland could ensure that the future power sector will be cheaper, cleaner, and more secure than the one they have today. And thank you.
Lorenzo, Jonathan, thanks very much for that presentation. Very clear analysis, very clear messages as well. Actually, Lorenzo, I wondered, would you mind just leaving that last slide up, if that's all right? I think it's maybe, you know, with those concluding messages, just while Monica and Pavel give their commentary, useful for them, but I think also useful for the audience as well for their questions. Thanks, Lorenzo. And also just to thank you for those of you sending through your questions, and to note that we can come back to this in the discussion, no doubt, but Mark Johnson has flagged for us that the Polish minister has said today that Polish gas policy is under review, and I guess that could go a couple of ways, couldn't it? It could go in the coal direction, or it could go in more in the renewables direction. But thank you for that, Mark. Okay, so I'm now going to hand over to our two panelists for their commentary. So first of all, to Monica Morawicka, and I'm Monica. I hope I've got that pronunciation roughly right. Monica's from the Regulatory Assistance Project. And the Regulatory Assistance Project, it's an independent NGO dedicated to accelerating the transition to the low carbon economy. Monica's a senior advisor who focuses on power systems, transformation and design, and she has a particular emphasis on Central and Eastern Europe. Monica has 15 years working in the energy industry, previously worked for the PGE, Polish Energy Group, and has also been on the management board of the Polish Electricity Association. So, Monica, I think you're eminently qualified to comment on these topics, and I'll hand over to you. Thank you.
Thank you, Richard. Thank you very much. Hello, everyone. Well, thank you, Lorenzo and Jonathan, for this excellent presentation. I think the points were very clear, if maybe a little bit black and white, because I'll be playing maybe a devil's advocate here a little bit. While I fully support your final conclusion that accelerated renewables development is the biggest priority, I fully support that. I have some reservations on the 3 points that you raise here. And maybe one general comment at the beginning. I don't think the energy dilemma in Poland is renewables versus gas. That is not the dilemma. I think renewables are the go-to solution in any scenario. The real dilemma is what to do with existing coal, whether to switch it partly to gas or whether to leave it for longer and switch it to the target solution, which you referred to, which is renewables plus storage. I'll come back to that a bit later. So I really think it is not the Polish energy policy is not trying to say, look, forget about renewables. This is not what we're doing. Our transition will be a coal to gas transition. This is not what is happening. And if it is, it would be tragic, but I don't think it is. So maybe taking quickly one by one the 3 points made here. So if new gas plants incompatible with net zero targets, yes, if they were to be built instead of renewables. What I'm arguing is that they're not instead of renewables, they are alongside renewables, but instead of coal. And you have to, maybe let's come back a few years, why really these gas plants were being developed and are still developed. The problem with the Polish power system is this very inflexible power system because of this huge coal generation capacities. Coal generation has this inherent, problem of being largely inflexible in comparison to gas plants. Slow ramp up and ramp down times, quite large minimum load requirements, and so forth. And it is really difficult to integrate lots of intermittent renewables when you have so much inflexible generation. And this was really the reason why gas plants were being first proposed. And for this reason, also the diversification of gas sources was proposed. Which I'll touch a little bit later upon. So that's the first point I want to make. The second point, new gas plants that will be reliant on Polish taxpayer money, meaning capacity payments. Well, obviously capacity market is there, and capacity market is not only for gas plants. Lots of DSR projects were recently successful in the recent auction in the Polish capacity market. You could also argue that they are reliant on taxpayer money. This is a design of the market design that is in Poland put in place is energy plus capacity market, and this is, I believe, a right way to do that, as you also pointed out, that capacity market may be justified. There may be possible tweaks to them so that they perform better on their targets, but in general, I don't think it's a bad idea to have them, because we do need these two products essentially in the market: energy provided hopefully by cheap renewables, and capacity provided by, and this is a question mark, by what and in what timeframes. And the last point, that the gas plants pose significant energy security risk. Well, first of all, you were talking about economic risk, rightly so. So volatility of prices. And of course, you also showed volatility of CO2 prices on the other hand. So we generally have this volatility on the sort of commodity side. And I agree, it is a risky proposition to rely on volatile commodity markets. And definitely from this perspective, renewables are the best solution, especially the ones I truly believe backed by contracts for differences, where these instruments really provide stability both for the investors and for the consumer. The end consumer knows they will not pay more for this energy from renewables than the strike price of the contract. So absolutely, you're perfectly right to point this risk. But energy security, of course, is more than an economic risk. It's the import energy dependence risk, if you will. And at that point, I think it's really fair to mention that Poland has undertaken lots of steps in recent years to wean itself off energy imports from Russia, especially gas imports. And as of the end of this year, I think we'll be able to say that Poland is fully free from gas imports from Russia because of the LNG terminal built and because of the new gas pipeline to Norway that is being constructed and will be finished in the fall. So from this perspective, of course, you still have imported fuels, but you have imported fuels from more stable or more trustworthy business partners, if you will. In that sense, I think on this front, actually, Poland has delivered quite well, as opposed to some other countries in Europe. So, and just to summarize, again, I would absolutely support the conclusion that an absolute priority of the energy policy in Poland would be the speedy development of renewable energies. And that should happen much faster than it is now happening. And I agree that absolutely the roadblocks or the barriers that are there now should be removed. And so that is the first priority. And then alongside this priority, you have to think about flexibility in the market to be able to integrate those renewables. And I think, renewables plus 4-hour storage only does not really deliver what we need. We need seasonal storage, we need different types of flexibility in the market. We need not only, of course, supply side flexibility, we need a lot of demand side flexibility, we need a lot of interconnectors, we need properly functioning markets, we need storage, we need all of that. And I would say all of the above strategy. It's not black and white. It's not an easy solution to this problem we have. We don't have a silver bullet here, but absolutely the direction should be clear. Renewables provide all three of the energy trilemma elements together. So they provide climate protection, security of supply, and cheap energy to consumers. And that's definitely why they should be prioritized alongside energy efficiency, because as we know, the cheapest energy is the one that is not used. So I'll close that with that, my intervention. Thank you.
Monica, that's great. Thank you very much. And I think that was really good, both on the bigger picture points, but also on some of the detail as well. And maybe after you've spoken, Pavel, I'll turn back to Jonathan and Lorenzo if they'd like to address any of the, perhaps one or two of the sort of the bigger issues, which you just raised, Monica, one which is around almost, is the premise of the report, is that the right question in a way? And, is there something here about pivoting from coal to renewables? But also your point about energy security, not just being about economic security, but I guess you're talking here about geopolitical security as well, which has come into even sharper relief, of course, with the Russian invasion. So, and thank you for the questions that are coming from the audience, and we will get to those after Pavel has spoken and Jonathan Lorenzo responded. So, Pavel, to introduce you, Pavel Cisak is the Senior Energy and Climate Data Analyst at EMBA. For those who don't know EMBA, they're an energy think tank. They use data-driven insights to shift the world from coal to clean electricity. Pavel, whom I should point out, joined EMBA only in January, works on scaling up clean energy and the phase out of fossil fuels. And before that, he worked for the Instrat Foundation based in Warsaw on energy and climate, but Pavel's also worked in the corporate sector in energy and IT. So Pavel, over to you for 5 minutes, please.
Thank you, Richard, and hi everyone. I have a lot of notes from both to after Monica's well comments and after the presentation. So it's been very interesting up to now. Hope I don't disappoint you being the last one, but I think maybe to give a bit of a bigger picture in terms of the Polish energy strategy, because I think that maybe was missing up to now, because we've seen that the report covers the specific gas plants, but let's remember that Poland's energy strategy plans to increase power generation from gas four times by 2030. So that is a huge increase, the highest, in fact, in the EU in gas power generation. And I would argue, Lorenzo said the gas demand is expected to double. I think that the estimates are that it's gonna triple or even quadruple by 2030. So really, I'm not sure if we can cover all of that demand from LNG and from Norway. Of course, the idea was to get rid of Russian gas, but that might not be so easy as the government is painting it. It seems that the whole EU is now certain, or it's obvious for everybody, that gas is not a correct direction, and we should be scaling up renewables very quickly, and clean energy is really the only way we should be going. But here I'm not as optimistic as Monica, actually, because, well, the first response from our climate minister, from Poland's climate minister, Anna Moskwa, was that our response to Putin's invasion was that we should drop the 455 package and suspend the ETS and pretty much go back to coal. So it's not like Poland, the Polish government is suddenly turning green. I think it's actually the opposite. And there's, Monica mentioned this as one of the priorities. We still have so many barriers to renewables in Poland that it's pretty much impossible to accelerate them. So we have, just for context, we have a onshore wind law that pretty much locks the capacity at the current values, where we're not able to scale onshore wind energy past let's say 10 gigawatt point, and that is half what we need for both EU climate targets, but also for energy security. Then we have problems with connecting solar farms, because DSOs are declining up to 60% of the grid connection permits. So, and actually just today we've heard that the amendment to this problematic wind law will most likely be postponed again, because there's no political will to change it. So I am really not that optimistic that that the government is all of a sudden turning into a clean direction. We really need to kind of push hard to get Poland on the right track, on the track that Europe is actually already heading towards. The good news is that Poland's RES potential is very large, so there's a lot of investment opportunity. Poland could easily build 20 gigawatts of onshore power, probably 5 gigawatts of onshore, and maybe 30 gigawatts of solar by 2030. So these are quite big numbers, and quite a lot of investment opportunities. And really the only problem with that is now the political and regulatory barriers. And I would argue, like, these are actually the major problems, not the technical ones, because, well, of course you need the dispatchable capacity, and I agree with Monica that battery is probably not enough. But there's plenty of studies showing that you could, for example, keep a few coal plants running maybe a while longer. You could have a few peaker hydrogen-ready gas plants that would also help with the power balancing. But this is completely different than the large CCGT investments that Jonathan and Lorenzo were showing. Like the myth of using gas as a baseload energy source is just completely gone, and we just need to make sure that the Polish government understands that, because we are basically building gas plants assuming they will be running every day, maybe, I don't know, 50% of the time. And that's just not possible in a modern energy system. They will be most likely running maybe a couple hundred hours a year, or even not at all. So we're pumping taxpayer money into these investments that will probably not be even needed in the future. So coming back to the dilemma point, maybe, I think it's perfectly feasible to transition directly from coal to clean without that gas part. There's, again, multiple studies showing that it is technically viable, and really the only problem we're having now is not the technical issues, but the political will, the barriers, the regulatory barriers to RES that we are facing, and that just need to be unlocked ASAP, because the energy security now issues are now so pressing. Thank you.
Pavel, thanks very much indeed for giving us some real insights into both the economic, the climate energy, and the political pressures there on Polish energy policy. So the questions are coming in from the audience. Thank you for those. We'll get to those in a moment. I wonder, Lorenzo, if you could take down, yeah, that's right, take down that slide now, and so we'll get all the panel in living Technicolor. That's great, thank you. And before we turn to questions from the audience, Jonathan, Lorenzo, just wondered briefly, would you like to respond to any of those observations, coming both from Monica and from Pavel, particularly one to the sort of the bigger picture points that they made? Thanks.
Sure. So I'd like to thank both of them for their comments and points. I think a few I'd like to address the role of capacity markets, particularly. Just to re-emphasize, we accept that capacity market mechanisms can and are playing key roles across large parts of Europe in ensuring grid supply reliability. But we just urge policymakers to ensure that these schemes bear the climate backdrop and the need to decarbonize the power sector very quickly in mind when contracts are handed out, and that only the right types of capacity are being contracted. And as Pavel said, we particularly question the need for these mechanisms to continue to support the operation and funding of large-scale CCGTs, the business models for which are largely based on assumptions that these will run baseload rather than offering the flexible short-term peaking supplies that the grid will need over the long term to back up renewables. CCGTs are largely profitable if used at a steady load for long periods, but this is highly unlikely to be the case in the long run once we have a higher degree of renewable penetration in the system. And we're not completely writing the role of gas off, and we put a report out last year entitled "Put Gas on Standby," which, as you can probably guess from that title, we think the role for future gas is to be back up to renewables, and that role can be fulfilled by small-scale OCGTs, which have quicker startup times around 30 minutes rather than the lead-up times of 3 hours on average for CCGTs. But having said that, even those small-scale OCGTs will become more expensive than continuing to operate renewables plus storage over time. So we just feel that policymakers must be willing to regularly review and restructure these capacity market mechanisms to ensure that they are procuring the right types of capacity and bringing forward a wide variety of clean, reliable solutions. On the points Monica made about Poland's position in weaning itself off Russian gas, yeah, Poland is admittedly better placed than other EU member states to be able to cut its dependence with the Baltic pipe to Norway and the LNG terminal capacity it's looking to expand. And it's clear that in the short term, gas supplies will be needed to keep Polish homes warm and for the industrial sector before long-term decarbonisation solutions come along for those hard-to-abate sectors. But for the power sector, this access to alternative markets for your gas supplies does not solve the issue that by pressing ahead with new large-scale developments, you will be significantly increasing your exposure to highly volatile and most likely expensive markets, because it's certainly not just Poland that will be sourcing their gas from Norway and the global LNG market over the coming years. Poland needs to now look beyond planning a coal to gas transition, because recent developments have made it very clear that that would be a bad idea, and that gas actually cannot be relied upon for energy supply security. I think what this situation has done has made us all look at that security of supply picture on a much broader scale than perhaps the national system level that was put forward before, and simply having enough reliable generation capacity to meet estimated demand. There's always been a huge amount of political sensitivity associated with reliance on fossil fuel imports, and it's becoming very clear now that that's actually the only way to ensure your energy supply security is to aim for energy dependence, and the cheapest way for nations to do that is to turn to lower risk and lower cost renewables backed up by energy storage solutions. And sorry, finally on that energy storage, and Monica's point about batteries, there are clearly still technical challenges to overcome for batteries, but we are confident that these hurdles will become easier to navigate for developers over time once the initial set of projects in Europe are delivered. And we're now seeing individual projects of up to 400 megawatts in capacity get approval in parts of Europe. And the quicker we get these developed, the quicker we can scale up, and the costs will come down, just as we've seen in the rollout of other renewable technologies in recent times. I'd like to stress, however, that although in this project we presented the cost comparison analysis for renewables with storage against gas, we are by no means suggesting that this is the only solution, and believe that, of course, it will require a diverse range of low carbon technologies to ultimately replicate the role that the gas provides. But although we didn't run a full systems analysis for this particular report, and it was more of a cost comparison exercise, we did run this sort of analysis in a series of reports we published last year, focused on the new build gas capacity planned in the UK and Italy. And we found in that series of projects that a clean energy portfolio combining onshore and offshore wind, solar, battery storage, and then improved energy efficiency and demand side response initiatives would be able to replicate the role of peaking gas units. So the solutions are there. We just need to accelerate deployment and shift focus towards these cleaner technologies to allow for both the security of supply and the decarbonisation elements to be delivered.
Thanks, Jonathan. Really fulsome response. I'm going to turn to the questions from the audience now, and they're sort of come in three groups, I would say. There's three around nuclear. No surprise to hear that come up. A couple of the bigger picture issues, I would say, relating to politicization of Polish energy policy and gas as transition fuel, and more technical questions. I'm going to put the technical questions to one side for a moment, and actually, Monica, Pavel, I'm going to ask you to answer the nuclear question here. Monica, you didn't mention that. Could you comment on it, because it features in Polish government's plans? Stephen Bai has asked to comment on Poland's plans to go nuclear, and also from Kazia Krasuka, where does nuclear fit in? So maybe Monica, do you want to take that? And Pavel, you're welcome to coming on as well. Thanks.
Sure, gladly, and thank you for this question, because it is a valid question, of course. Although it is a question for longer term than the one that we are speaking here about, I think. Definitely, you know, judging purely from a climate perspective, nuclear is a very attractive proposition. It is zero carbon or close to zero carbon. Plus it is a non-intermittent, it's dispatchable generation. So it does tick many of the boxes. But to mention just a few, but having said that, of course, the biggest issue with nuclear is that it's expensive and very time consuming to build. So whereas I am quite convinced on existing nuclear that it would be a good policy to keep them on as long as safe, basically. For new nuclear, you have to judge whether, you know, by the time they're built, we will have enough alternative proposals to fill that gap, or whether we really need that. And of course, this question is not something that we can answer, I think, today fully. And the second thing is, of course, this should be looked at a European scale. So not country by country basis. You don't need to have, even if we agree somehow that nuclear is part of the long-term solution, it doesn't have to be part of each country's long-term solution, if you know what I mean. It can be a part of the European solution. So I think, you know, nuclear is, just summing up, it is a zero carbon source, good for climate protection. It is costly and it is long-term perspective, and we have to judge that. Nuclear has been part of Polish energy policy for now probably close to 15 years as a goal to develop. We are still getting, I mean, we're getting closer and closer, but still quite far from it. So it is a mixed picture, if you will.
Monica, thank you, and point taken about it being a European-wide issue as well as not just for Poland on nuclear. So, Pavel, could you take the question which has come in from Andrzej Kassenberg about the high politicization of energy policy? I wonder if you might want to comment on that from your Polish perspective. And then I'll turn to Jonathan Lorenzo after that, the question from Simon Perham about, does your analysis really nail this about gas being a transition fuel or not? But maybe Jonathan Lorenzo, in the meantime, some of the technical questions that have come through, I'm just wondering, the time available, if you might answer them, just type your answers to those and we can concentrate on one or two of these other issues. Thank you. So Pavel, how about this question about the high politicization of energy policy? How much of a problem is that?
Yeah, I think that's actually a huge problem, and maybe coming a bit back to history and to my point, the risks associated with using lots of gas in the power mix, they're not new. We've all known that gas prices are volatile and that we're sourcing the gas from different areas that are perhaps not so stable. That actually that relates to all fossil fuels. So experts have been warning that the very gas-heavy strategy of Poland is probably not the best one. So I think we're now just suffering from not adapting that strategy to what Europe is doing, and I think that is one bit of the politics. But even though the even worse part is the renewables part, because again, the barriers to renewables deployment are not technical; they are just purely political, and we need to lift these barriers as soon as we can, because we just need energy. Our coal plants are starting to fail, so we need to replace them with something anyways. And that's something, the quickest something we can build, and the cheapest we can build is actually wind and solar. So I would say yes, the politics are in the way of not only climate but also security. I'm not sure if that was mentioned, but actually Boris Johnson proposed to expand wind energy to not connected with climate, but actually to increase UK's security of supply. So I think we should perhaps go down that route and think of renewables not particularly at a climate tool, but also a tool to ensure independence, energy independence, security of supply, really security of the country, because let's remember Poland is EU's and NATO's east flank. So the more secure Poland is, the more secure Europe is, really.
Thanks, Pavel, and we hear you loud and clear on political will, and also, I mean, my own personal view on energy security. As you say, we need a redefinition of energy security in 2022, really, as opposed to maybe one or two outdated notions. So, Jonathan, here's a big question for you from Simon Perham. Does your analysis here effectively end the argument that gas is a transition fuel globally?
I think so. I think we need to move past this labelling of gas as transitional, and particularly urge the EU to rethink their labelling of gas as sustainable and transitional in the taxonomy. We need to be clear. This isn't a transition or a bridge fuel. It's a fossil fuel. Gas is a fossil fuel, and that needs to be phoned up in policy. And I think, you know, this whole bridge fuel idea has been built on the premise that you know, the intermittency of renewables needs to be backed up, and every megawatt of wind or solar needs a megawatt of gas to cover it before battery storage comes along. And you know, flexibility is key while we wean ourselves and we complete our coal phase out in Europe. But flexibility doesn't have to exclusively come from gas. As I said earlier, better demand side management, pumped storage, hydro, and ultimately battery storage are all able to provide flexibility services to the grid to juggle periods of low renewable energy output. And I think the intermittency issue for renewables, I think for too long, has been viewed by policymakers generally as this sort of insoluble impediment that cannot be overcome. But it's actually just an obstacle that we need to tackle on the path to net zero, and can be addressed through innovation. The world has been chronically underinvesting in low carbon energy capacity for way too long now. We haven't aligned our coal phase out policies well enough with the policies required to drive accelerated low carbon capacity deployment. And the mismatch between supply and demand that is created should certainly not be a signal to turn to gas, but actually to a rallying call to accelerate investment in low carbon energy capacity, and ultimately a power system centered around renewables and storage gives us that opportunity to aim for self-sufficiency, and that is something that should be grasped.
Right, Jonathan, thank you very much for addressing that. Here's a different question from another angle, and anybody in the panel might want to take this, from Matteo Cavallito. How much does financial speculation affect the huge price and volatility spikes in the gas market? Non-financial energy companies are exempt from position limits on the spot market under the so-called MiFID quick fix. Isn't this a dangerous loophole? Anybody like to take that one? Maybe not. Okay, more of a sort of financial regulatory question. So maybe we'll put that to one side. Coming back to some of the other questions, Pierre Lenders has submitted a couple. Thanks, Pierre. First on saying he agrees that the fossil fuel projects make no economic sense, but isn't there a risk we're over optimistic to think the price of building more renewables assets can be inferred from current prices? So question, I think, here for you, Jonathan Lorenzo, about assumptions that you built in here. And also Pierre asked about emissions linked to gas powered production when methane leakages are taken into account. Jonathan Lorenzo, do you want to take either, both of those? Lorenzo, are you happy to speak about the assumptions in the model?
Sure. I can comment on the renewables cost question, and it's like our assumption cover a range of possible scenarios for the renewables costs, and we try to keep it wide on purpose, not to be overly optimistic. And we can see that both in at today's prices and with expected cost reduction there is no question that renewables plus storage will be cheaper. And to recall what Jonathan mentioned before, that in previous report we did analyze what will be the comparative cost of a new gas plant versus a portfolio of clean solutions. So that would include both storage, renewables, demand side response, and efficiency measures. And in those cases, the comparison is even stronger than towards the renewable side. And on the upstream emission of natural gas sector, we currently do not cover that, but that is a very good point. And it's another reason why investing in gas could be even more politically risky, because with the signature of the methane pledge at COP, we see that countries are starting to look at that aspect more. So we expect regulation coming towards increasing the monitoring and reduction of emission in the upstream gas extraction sector. So from flaring at oil fields to venting in storage tanks and transportation, we know there is still a lot that is not covered. And we also feel like that something is going to come on that.
Thanks, Lorenzo. And Monica, thanks for answering that question from Robbie Morrison on German gas heating. So we haven't got anything more here from the audience, although no, we do have from Robbie Morrison just come in. Closing comment for Carbon Tracker. I think Monica essentially highlighted scenario-based integrated high-resolution energy system modeling can contribute, and so provided some suitable open source frameworks. Robbie, thank you very much indeed. We've got 4 minutes left. Just turning to our panelists, any concluding comments you'd like to make in the light of what you've heard and what you've been asked about as well? And I'm going to go sort of in reverse order now. So maybe Pavel, let's go to you first, if that's all right.
Yes, well, I actually started responding to Robbie, but I would agree totally. And actually, some of the numbers I was citing were not made up. They were from a modeling study from last year. That is open source and open data, so you can replicate it. The model is available. That is for Poland, but of course, we're talking about Poland. And that study actually proves that you can skip the gas part, transition from coal to clean, make the system secure, lower the tariffs, even if you account for all the grid costs, grid expansion, flexibility service, lots and lots of things. So I would say, again, I don't think there's really a dilemma here, but there's a political issue that we need to solve quickly, and we just need to open the way for renewables, stop really focusing on the fossil fuel side, and start building wind turbines.
Thanks, Pavel. That's excellent. So Monica, a minute for you, and then Jonathan, Lorenzo, a minute for you in conclusion. Thanks.
I just wanted to point out that the fact that I'm saying what policies should look like, it does not really mean that I think they are going in the right direction right now, because they are clearly, there are some barriers, and we talked about them. But also just to point out that some of the things that are happening instead of or in spite of policies not being ambitious enough. For example, we've got the new grid development plan from the TSO, the Polish TSO, published just 2 days ago, I think, that says that by 2030 we'll have 50% renewables in the mix. Whether we'll get there with current policies is a different story, but at least there is a potential, and it's clear potential because of already awarded grid connections. So, you know, the picture is not whole black, I'd say. We don't have full solutions right now. I think definitely going direction renewables plus storage, different types of storage, of course, and different types of flexibility and energy efficiency. That is the way to go. Midterm, once capacity market ends for coal plants in 2025 and coal plants will be retired, there will be a question of capacity adequacy in Poland, generation adequacy, and this will have to be addressed. Thank you.
Thanks, Monica, for some encouraging remarks in conclusion there. So Jonathan, Lorenzo, final contributions from you?
Yeah, I think I just might add that and re-emphasize that it's crises like the current one we are seeing that can prompt rapid change and shifts in outlook from policymakers, and the narrative around fossil fuels has quite clearly changed in recent weeks. As I said, the primary counter argument against shifting away from them has always been the energy security that they provide compared with renewables, and for Poland that has always overridden any environmental concerns government has had. But the arguments are building by the day against the long-term reliance on fossil fuels, and aspirations for net zero now not only represent the best possible scenario for the climate, but also for nations in achieving independence from volatile fossil fuel markets. Even if Poland does not opt for a national net zero target anytime soon, the fact remains that it is an EU member state, and to avoid creating political tension with other European neighbours, that the Polish government needs to be seen to be making measured progress in decarbonisation with the EU's 2050 climate neutrality target in mind. So I'd really urge the Polish government to take this opportunity to change its strategy and to plan a coal to clean transition rather than coal to gas one it originally had in mind.
Thank you, Jonathan. Very clear concluding remarks there. We're a minute over time, so we should draw this to a close, but thanks very much to all our panelists. I think both the presentations, but also the way that you address the different questions, excellent contributions. Wanted to thank Helena Gray and Evgenia Zilias of our events team for masterminding this webinar, but also to the audience, and over 50 stayed on beyond time, so hope you found it useful as well. And just to say that, I mean, one or two of the questions, if they weren't picked up, and I'm sorry if we didn't quite have that time, but we'll see if we can reply to those and to keep the dialogue going, I think, everybody here, because this is clearly not going to go away. Thanks very much and have a good rest of the day. All the best. Bye-bye.
Thank you.
Thank you.
Bye-bye.